If I think about should people buy BP, ultimately there's a lot of value in that company. The sum of the parts is, I think, much greater than where the current share price is. And so if I'm thinking about when's that point of maximum weakness for BP, it's over the next 6 months.
Right.
Ultimately, debt continues to go up a little bit from where we are. Production continues to fall until mid-26. As I get towards the end of the year, hopefully we'll see that some of the divestments taking down debt. Things like they've talked about from selling their lubricants business. That could raise $12 to $15 billion. It brings down debt. You start to see the benefit of cost savings coming through, and then production growth starts kicking in next year. So actually the future for BP, I think, is really bright if you can get through the next 6 months.
But it's not just BP, is it, that looks cheap compared to the US peers? The amount of times I've asked a major European CEO, why don't you list stateside and enjoy the Chevron and Exxon-like valuations? They always say no, but I mean, you can see the tantalising difference in valuation.
I'd love to see the European group valued in the same way as the US group. But it comes back to what I was saying about US shale, I think, here, that the last decade, it's been the shale that has really driven the growth. The US companies have been well positioned in that area, and that's been able to drive the growth. The European companies haven't really had the access to that. They've not been big in US shale, so they haven't had the growth. If I'm right about that shift away from US shale and into more Middle East, more offshore being the areas that we're going to have to invest in as growing, the European companies are actually better positioned.
Okay.
So it may well come back that European companies can actually stay here and re-rate from where we are. But it's that shift in dynamics between the US and Europe on demand is really going to be key.